Welcome to the channel, guys. My name is Jess. So September has historically been quite a bearish month for Bitcoin, and with the market hinging on the federal interest rate decision coming in the next couple of weeks, not to mention all the other economic news we have in the next fortnight, it seems that Bitcoin is in for an absolute roller coaster of a month. So let's dive into the video today to talk about how this volatility might translate onto the macro charts and to what extent Bitcoin can correct before we enter a bear market. Conversely, we can use the same validations to continue to confirm a macro bullish trajectory amidst all the volatility. Before we dive into all that though, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram channel for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. Alrighty guys, as per usual, before we dive into our analysis, I'm going to go ahead and give you guys a little bit of context, obviously, on what on earth has been going on, I guess, in September as well. So if we head over onto CoinGlass, you guys can see that historically, September has always, or generally, sorry, not always, yielded negative results for Bitcoin, particularly in the last 7-year period. Excluding 2023, we had a 6-year streak where Bitcoin had negative returns, right? And this is not just cryptocurrency. S&P 500 September, again, is the only month that has averaged negative returns over, the monthly period for the last 98 years, right? It has generally been negative. And there could be a number of reasons why that happens, but one of them is because of the massive amount of economic data that happens in September, and because of the natural volatile nature of economic data, right? It's unpredictable to some degree. Investors tend to take quite a off attitude or a risk averse attitude. If we go ahead and take a look at trading economics, we can see that just in the next couple of days alone, so tomorrow we have jobless claims data, and then on Friday we have NFP data coming out as well. Next week we have CPI, PPI, and then on the 18th of September we have the federal interest rate decision, which is really, really big this month because this is when we're finally expecting actual rate cuts. So whether or not that happens and to what degree those rate cuts are going to be is going to heavily affect the market. If you take a look at Bitcoin, in the last 6-month period, Bitcoin has been continually traveling in this descending channel formation. And if we do not get, the kind of bullish news that we're expecting, we have a potential here to see quite a large correction all the way down to the range low of our structure here at $53-ish thousand, depending on where we sit along the trend line, and losing that structure there along with other validations, which I'll talk about in a moment, we have the potential to enter a macro bear market. So let's go ahead and dive into our analysis. Let's talk about what do we have right now that's telling us that we are in fact still in a bull market, and how much volatility can we see, how much can we drop before that becomes invalidated. Before we get into any more analysis, guys, let's share a quick word from our sponsor Bitunix, where you can get 15% off all of your trading fees and up to $5,500 in sign-up rewards by creating your free account using the link down in my description box. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. Okay, so starting off on the weekly time frame, so what we've got here is the Ichimoku cloud, specifically the leading span B, which is that lower and fainter red line down here, and the baseline, which is the upper darker red line. So the leading span B is a momentum indicator, and it is the highs and lows of the last 52 periods divided by 2 and then projected over the next 26 periods. So essentially it's telling us whether or not we are gaining or losing momentum based on how the price action is sitting as well on top of that leading span B. The baseline is more of a trend indicator. It can be momentum if used conjunctively, but it is the average of the last 26 periods of price action. So more of a moving average sort of, indicator. So on the weekly time frame, the Ichimoku cloud is really great at telling us and confirming to us whether or not we are entering a macro bull market, or conversely are about to see an extended period of bearish price action, aka a bear market. And what we generally tend to see for a bullish break is the break above the leading span B here, as well as the baseline crossing over that leading span B as well. On the opposite side, if we enter a bear market, for example over here, we have the price action breaking down from the leading span B, so that momentum indicator, confirmed later as well by the breakdown of the baseline from that leading span B. So that's telling us that the last 26 periods of price action have been lower than, or have had decreasing momentum in comparison to that projection over here from that prior 52-week period. So that generally is what confirms to us that we're going to see that extended period. For example, over here, we had a period of 300 days, I think 322 days of bearish price action. And back in this bull market, for example, breaking above that level led to a 522-day period, or 520-ish day period of bullish price action. And so that's the exact same thing as what we saw here, guys. So we've broken above the leading span B here, and while we remain above the base of that leading span B, and while the baseline remains above that leading span B as well, we can say that technically Bitcoin continues to be in a bull market. No matter how long or how much we are chopping up and down and sideways, while we remain above that level there, we are technically in a bull market. So that's confirmation to us, amidst all this volatility, that Bitcoin will continue to be bullish. So for example, in September, if we do end up chopping all the way downwards to retest sell side liquidity of this range low here, right from that prior range low retest, you guys can see it a lot better on the daily time frame. This was that sell side liquidity at 48,900. As long as we do not break below that level on a weekly time frame and get that close below there, Bitcoin is still in a bull market. So while that would be absolutely huge, as you guys can imagine, it would also mean another range low retest, like an extended range low retest, and a flash downwards, probably below that structural level there within the descending channel. Technically, Bitcoin is still in a bull market. And that also tells us that if we do see that breakdown there on a weekly time frame and latently get confirmation from the baseline also crossing below that leading span B, we are definitely entering a macro bear market. And that is when you can kind of act accordingly based on the information. We will not, or we are very unlikely then, severely unlikely then, to somehow recover, break above the top of this structure here, and, continue on in that parabolic rally that we were expecting post interest rate cuts. So essentially moving into September, which we know is potentially more likely to be either very, very volatile or to some degree bearish. If we do get a weekly breakdown of this level over here, we have momentum confirmation, we have structural confirmation from the breakdown of our descending channel, as well as horizontal confirmation from the breakdown of our high time frame support here from $51,000 to $47,000. The breakdown of that major level of horizontal support, that we are entering a macro bearish trajectory. So obviously you guys are probably thinking, oh, okay, that's great to know, Jess, but what about right now? Does this mean that we're going to see this breakdown now to the range low? Am I saying that that's likely? No, not particularly, but it is something to be looking out for. So one of the reasons why I do not think it is particularly likely that we see that is a slightly smaller time frame indicator that we have on the 3-day chart, known as the Gaussian channel. And I've spoken about it a couple times in my YouTube, so I don't really want to go over it too much. But on the 3-day chart, what we have that's also a great indicator for whether or not we are entering a macro bear market, or above it, continue to be in a high time frame bullish trajectory, is the 3-day Gaussian channel, where traditionally or historically breaking below, we enter a high time frame downtrend, especially when we reject off the midline of the Gaussian channel. And breaking above is generally when we see the start of a high time frame bullish trajectory as well. So going over to our most recent segment of price action, what we can see is that if we do get another range low retest over here, if we don't manage to recover quickly enough to establish a 3-day candle close above the base of the Gaussian channel there, it is the very first kind of warning sign that maybe we are potentially entering that macro bear market. Now, don't forget everything I've just talked about though. The weekly chart is still very, very valid. So just because we've seen that isn't the be all and end all, right? Because as you guys know, we have momentum, structural, and horizontal support down at these levels here. That is that really high time from confirmation then that we are definitely entering that bear market. So September is going to be quite a volatile month. I think we all know that, so we might see that flash downwards, but because we have such a strong level of support here, I do think it is to some degree unlikely. Now that takes us into the short time frame price action. What's going on over there? We've just had a little bit of a crash downwards to $56,000. How's the price action looking? Let's go ahead and take a look. So moving into the 6-hour time frame, guys, we can see that Bitcoin's had a little bit of a crash in the last couple of hours. So like I said in my last video, if we did lose this base of support at 57,300, it's very likely then that Bitcoin will then move into this liquidity zone here and test the sell side liquidity level at 56,000. So that's pretty much exactly what Bitcoin did. It moved all the way down to 55.6 thousand. But what we can see as of right now, we've still got a couple minutes left till the 4-hour candle close, is that this next candle close should very likely be above this bearish trigger over here. And that brings us into the conversation of our short time frame bearish case scenario. So in all those topics, and we talked about the potential move to a range low, the very first thing that we're going to see in that move is a breakdown of our short time frame support here at 57.3, followed by a 4-hour close below that corresponding change of character level, or the sell side liquidity level here at 56,000. So if we get that 4-hour candle close, it is very likely then that we move into a short time frame bearish case scenario and see potentially a range low retest of our macro structure. So that might not be as low as 48,000 here. The top of that liquidity zone sits all the way up here at 53K. And that also coincides with the range low of that macro structure that we have going on. So as well as the 4-hour chart, we also have confirmation on the daily chart as well. So if I just move over onto the daily and show you guys what I'm talking about and pull away the Gaussian channel, what Bitcoin will also do if we fall below that level on the 4-hour time frame is move into this next key liquidity zone here, starting at 56,500. So a daily candle close below that level as well, again, suggests the movement into this zone here, where the base of which is all the way down once again at $53.5 thousand. So moving into that liquidity zone on a daily time frame suggests that we are going to continue to travel within that area. Right below that, again, next level here, starting at 53,800, close below that on a daily time frame suggests a move into this area here of sell side liquidity, ending at 48,900. And that is when that whole conversation that we spoke about, guys, on the weekly time frame, we're moving below, is also below the leading span B on the Ichimoku, and also, you know, our key momentum, structural, horizontal kind of levels of support, right? Because that is when we have confirmed the loss of our macro structure here. With that daily close below this level, and then a weekly close below that level suggests enough of a shift in high time frame momentum that we are entering a macro bear market, right? That's how all of that sort of leads in together. So that is the bearish case scenario, and as of right now, it does look like, you know, Bitcoin is recovering quite well. If we take a look at the RSI, we've got triple bullish divergence here from these 3 peaks. So we've got 1, 2, 3 lowering peaks here with 3 sort of higher highs on the RSI trend line. So we've got increasing buying pressure as, you know, the price action sort of develops in a downwards trend line. So that does tell us that we are sort of gaining strength. It is just following a period of also hidden bearish divergence, so where we had increasing buying pressure, but it was unable to push us past this key level of resistance here at the 50 SMA. So a little bit of conflicting information, but now that we've fulfilled that hidden bearish divergence and that rejection there, and that rejection was not enough to push us below the bearish trigger, I am expecting a recovery as of right now. So in that recovery move, that takes us back into the horizontal channel over here, our horizontal chop zone, as you guys know that I've been calling it, or the neutral territory for Bitcoin on the short time frame, and that is between $57.3 to $61.7 thousand. So while Bitcoin chops within this level, really nothing important to be honest, but breaking above this level here is when we start to enter the sort of bullish short time frame scenario. So that includes breaking above this short time frame resistance at 61.7, 1.7 and seeing a bullish continuation on the slightly higher time frame to see that range high retest begins with a 4-hour candle close above buy side liquidity here, that green line at our prior level of resistance. Oopsies, sorry. Prior level of resistance at 65,000. So that is when we see an extended period of bullish price action into that range high instead. So what else do we need to see in order to facilitate that move? I do really quickly want to go back onto the weekly chart to show you. Why don't we do it on a different chart, because there's a lot going on there. I can't be bothered to delete it. So we'll just quickly go onto the Bybit chart. Again, because I don't really use it, and we can see over here we have an RSI downtrend on the weekly time frame, and that is going to be one of the first signs that we have moving into this next segment that September might actually be a bullish month. So if we break above this level here, or this downtrending resistance that we have on the RSI, that is a sign then that we are going to potentially see that move to the range high over here, and continuing in that bullish momentum trajectory, facilitate that higher time frame of bullish continuation and the continuation of our bull market. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to get 15% off all of your trading fees by signing up down below to Bitunix. I hope you guys have a great week, and I'll catch you in the next one. Bye!